Hello, everyone. It's a pleasure to be here. Thanks very much for the Beacon events and the IMARC team for having Cobalt Institute here. And the focus of my presentation today will be on the cobalt market trends globally and in Australia. So just quickly, the Cobalt Institute is a trade association that represents the entire cobalt value chain from producers to recyclers, processors, and users and traders. We promote sustainable and responsible production of cobalt in all its forms. And really, Cobalt Institute is a knowledge center for stakeholders around the world, including here in Australia, that produces and promotes reliable and verifiable information on cobalt. And we also work with decision makers in key cobalt jurisdictions in the US, in the EU, in the Congo, here in Australia, to provide a platform for frank and constructive discussions. So our membership is about 55 plus companies that cover the entire cobalt value chain here in Australia. Our members include Cobalt Blue, Jervois, and Glencore. And before I delve into the market trends, just a quick big picture of the cobalt industry. Really, this chart describes the importance of various upstream sources of cobalt and also the multitude of cobalt applications. And as you see on the left-hand side, cobalt's byproduct of copper and nickel. Here in Australia, it's byproduct of both. And on the right-hand side, you see that most of cobalt goes into electric vehicle batteries, but it's also essential for many more applications. Your mobile phone, laptop, ceramics, fighter jets, passenger jets, tires, and even vitamin B12. Can I go back? So if you were to leave this presentation with one message, it would be that energy transition is impossible without cobalt. And the reason I'm saying this is actually backed by data. We developed a Cobalt 2050 study together with Bloomberg NEF, which is a critical piece of research. And in fact, it's the first of its kind for any energy transition metal. And it proves that cobalt will be essential for reaching the global 2050 net zero target. As you know, transport is responsible for a lot of emissions, 30% in the US, 20% in Australia, and decarbonizing road transport is an essential requirement to achieving the energy transition. And this means the urgent deployment of batteries for electric vehicles. Now, we know there are conversations about the current market headwinds for the electric vehicle industry around the world and the use of cobalt in batteries in this regard. I would like to reframe this issue, which to us as the Cobalt Institute is essentially about ICE versus us. The climate emergency is real, decarbonizing transport is urgent, and electrifying road transport is critical. And this is where cobalt comes in as one of the key elements of the electric vehicle battery that gives it the range, safety, and durability. And global annual demand for cobalt from batteries will grow more than threefold between 2020 and 2050. That's what the study showed. And the overall battery industry will require at least 5.5 million tons of cobalt up to 2050 to power the electric vehicle. The bad news, we don't have enough cobalt now. The good news is that more can be mined, but what's needed, first, it needs investment. The study showed that $1.7 billion of new investment would needed for cobalt to help achieve the energy transition. Now, because cobalt's byproduct, this number goes on top of 500 billion for copper and 60 billion for nickel of new investments. Second, good policies to help cobalt achieve its energy transition potential. And third is partnership that will help build a reliable cobalt value chain. Now, going into the key market trends, as you see, on the demand side, strong annual growth continues. On the supply side, last year we saw record supplies coming mostly from the DRC and Indonesia. We are in a weak pricing situation. Interestingly, geopolitics is coming along, and I'll talk about this later. Overall, the outlook remains positive. Now, going into the demand side, last year was another strong year of cobalt demand growth, with 10% year-on-year growth in 2028. We expect this figure to be 8% this year. And the real takeaway is on the right-hand side, which shows that electric vehicle is really the dominant market driver. And this is also where the demand will go moving forward. Now we've seen, is electric vehicle market growing or slowing? We've heard much rhetoric on this. Our view is that we've simply come off a very strong annual growth rates. It was about 100% in 2021, 50% in 22 and 2022, and this growth was simply not reliable. Now, we've now come to more sensible levels of 30–40% of annual growth, and this is still strong. The general macroeconomic headwinds, like the cost of living and inflation, have impact on consumer choices for electric vehicles. But as you see in the US and in Europe, cobalt-containing battery models of cars with cobalt-containing batteries are still in the lead. For Australia, I read the statistics, 3.8% of new EV cars bought in 2022 were electric. This number grew to 8.5% in 2023, and I believe there's more opportunities to grow, especially when it comes to the range that's so much needed for an electric vehicle for an Australian consumer. On the supply side, sorry about this. On the supply side, we've seen a lot of movement last year, and it continues this year. It's really all about DRC and Indonesia now. In 2023, thanks to quick ramp-up of Chinese CMOC mining at Tankifon Gurume, CMOC overtook Glencore as the world's biggest cobalt producer. And we see the situation going on this year. And in 2024, already Australian supply fell 14% as production slowed due to challenging market conditions. On the market balance side, overall, the trend is being downwards for both for metal hydroxide and sulfate cobalt products, but the cobalt market is forecast to remain oversupplied in the short term as supply growth continues and outpaces demand growth for now. But from mid to late 2020s, the balance was shifted to a deficit, and as recyclers and cobalt producers and refiners are not expected to meet the rising cobalt demand. So as the deficit approaches, prices are expected to recover. Now, going on to the part that I find quite interesting, and that's quite new to the cobalt market trends, is the geopolitics. Sorry, I'm trying to fight with the clicker here. But what we've seen is the rising importance of geopolitics, and this all is driven by increased focus on critical minerals in the energy transition. We're seeing clear push from the major jurisdictions to improve their supply position and the risk from China. All factors for last year on this slide. We've seen IRA in the US, Critical Raw Materials Act in the EU, elections in the DRC and Indonesia, and also major elections in the US are happening in just a few days, so political landscape can be very different next year. And this year, what we've seen is also countries implementing protectionist policies against Chinese-made EVs. This is done to ensure supply chains and protect domestic production. The US increased the tariff rate on China-made electric vehicles from 25% to 100% this year. The EU is set to impose tariffs on the EVs made in China up to 45%, although last week they've agreed to hold further technical negotiations, and there's a similar situation in Brazil. So Looking forward, what is to pay attention for? It is clear that the market pressure will persist. Oversupply situation will continue to put pressure on prices. But it is important to remember that cobalt plays a key role in the energy transition, both on political and technical level, and demand growth will catch up with supply growth and market will come back into balance. And geopolitical agenda is still of rising importance, so this is something to keep an eye on. Now, focusing very briefly on Australia, it has the second largest resources of cobalt in the world, and it is on top of 5 major cobalt producing countries, although last year it produced 2.2% of cobalt. Market conditions are challenging at the moment, but as we've seen, they're expected to recover and more cobalt will be needed to achieve energy transition. In addition to its reserves, Australia is well positioned politically to embrace this opportunity. It has strong international partnerships. It signed an MOU with the EU this year, has similar agreement with Canada. It's part of the Mineral Security Partnership. And it's also cobalt coming from Australia is compliant with US IRA. So what is also needed, I think, is to increase Australia's sovereign capability along the cobalt value chain in mineral processing, refining, smelting, as well as recycling. And Australia has an opportunity to add significant value to building a reliable cobalt value chain. And what's really needed for this is 3 things: is capital investment, its new capacity, and its partnerships and policies that allow this to happen. The only thing is that this is needed urgently and time to act is now. Thank you very much. If you have any questions, feel free to reach out to me, and thank you for your attention.